I have no clue what I was saying. Yeah. Yep. Whether the Fed raises interest rates or not is pretty much irrelevant these days because something very interesting is happening with the bonds. A 10-year bond yield has been going up and slowly but surely approaching 2%. This, as you may know, affects mortgage rates. So let's take a look at the impact that this is having for everybody who is thinking about real estate, investing, buying, selling, and what can we expect to see happen. So here is the interest rate bond yield, and you can see it's been going up and it's sitting currently at 1.916. This has been going up substantially. And let's see if we can get the chart. So here is the chart that we are going to take a look at. And as you can see, it has been going up actually quite substantially over the last few months. We did hit a bit of a low a few months back in December, and since that, it has been going steadily up. Now, contrasting that to what's been happening with the stonks, you can see that there is some benefit to it. But before you get too excited about getting into bonds, one thing to note is that our inflation, or the silent tax on all of our wealth, is well over 7%. So, and of course, we're speaking for United States here. So, getting 2% for 7% means that you're losing 5% every single year. Now, the reason I was sharing with you what the bonds are doing is because it has something very interesting that is happening with mortgages. As you might be aware, mortgage rates actually depend and follow the 10-year yield for bonds. And so, of course, now we have CNBC creating the newsflash alert. Mortgage rates hit 3.85%, highest since October of 2019. Now, in the last video, I have actually shared with you that I've already seen well over 4% in certain areas, and that is going to continue to rise. Here is what Zillow is showing us as far as the mortgage rate trends. And you can see that it has been since November steadily climbing up. The green line over here you're looking at is the 30-year yield. The 15-year is the dark bluish navy whatever, and it's kind of going up, and then you can see that the 5-year arm is sort of sideways. So yes, you can still get, relatively speaking, lower rates. However, one of the pieces to note is that they are going up. Long gone are the below 2% interest rates, and I don't think we're going to see that quite yet. We have another report coming in that is from CoreLogic, and it's basically talking about home price appreciation cooling in 2022, and I absolutely agree with it. Now, one of the pieces that they are forecasting is that the price gains will slow to 3.5% by December of 2022. This is actually not bad. This is very typical for real estate, and 3.5% appreciation is roughly average. It's about 3 to 5% on a typical year. What we've seen the last few years, it's a bit on the crazy end of things, and it's not really normal. So the cooling down makes sense. And when we look at the mortgage rates, which is how we all purchase homes, it absolutely makes sense that the prices will cool down. But of course, now the question comes in, what about inflation? What's happening there? Well, I do have a bit of a report that I was able to scour on the nets for all of us. And as you can see, that the central banks around the world are looking and making decisions in the upcoming weeks of what they will be doing. US is not one of those, but we do see some European countries, we do see some Asian countries, and then of course we have some Central and Latin America of what's happening there. So the inflation, of course, has been going up, and the wages are kind of keeping up, but depends on where you're looking at it. For some individuals, yes, the wages are going up. For others, not so much. Interesting piece about wages, it's not keeping pace with inflation. And some of the wage growth that we're seeing, a lot of it had to do with the lack of employees. So the businesses were forced to give up more money, try to hire more people. But as things kind of start to slow down, we could potentially see that those are going to level off, and some may actually start experiencing some layoffs in the upcoming future. And why am I saying that? Well, some of it might have hired a bit more folks because things are heating up. You're trying to do some stuff. We've seen that a lot of things have been ordered and sitting in stock, but of course, things are not being purchased right now. So the economy is slowing down, the inflation is going up. And one of the pieces that is very concerning for the Fed is that when our income, when our wages go up, that means that inflation is going to sustain. So they will do whatever they can, sadly, to prevent that, because it's one thing where you can buy something on a whim here and there when you get some sort of bonus, but if your paycheck increases by 10, 20, 30, 40, 50%, of course you can then purchase 10, 20, 30, 40, 50% more of goodies. And that is one of the pieces that we can see that is slowing down. The interesting piece is that we've already noticing some of the slowing down piece, and there are some arguments to talk about potentially inflation coming to peak. And as you can see over here, we are having some areas, well, not over here quite yet. So Mexico Central Bank is back to apply steady pressure to quell inflation. And there are many other areas that are trying to do the same thing. I will show you. So here it is. We're seeing in some of the areas around the world that inflation is actually starting to peak, is starting to turn. For example, Mexico, for example, Brazil is starting to slow down. Chile, not so much. And of course, Turkey, not so much. US, not quite yet. And here are some of the hawkish areas that you can see. A lot of part of the Eastern Europe is sort of trying to increase the base rates. Well, of course, exception is Turkey. If you are looking at it, they actually have been decreasing and saying, forget the inflation, we're just going to keep decreasing and making money easier. In the US, we can see that CPI is going up and the core CPI, of course, is going up as well. The CPI is, of course, manipulated area, and it's not necessarily measuring and following what's been done in the 80s, and you likely already know that. There's plenty of videos that talk about it. Now, let's really focus on real estate and kind of what can you expect? What can we see? Is it going up? Is it going down? Is it good to own? Not so good to own? Of course, we all have to have a place to live. The long gone are the crazy appreciations, at least for right now. And of course, with the 10-year yield going on up, we are also expecting that in about a month plus minus, we're going to see an increase in interest rates. And there's expectation there's going to be multiple ones in 2022. Some are saying 2, some are saying 5. So anywhere between 2 and 5, we can expect to see it. Now, they're not going to hike it up a percent. They might increase it 25 basis points, which is 0.25%. So we can see some of that changing. I believe the yield might be going up. So we could see where the mortgage rates are going to be in the high 3s to maybe even low 5s in 2022. Of course, only time will tell if that is going to be accurate or not. That is going to bring the prices down and potentially sort of cool down the craze that we've seen. Now, one piece that is not necessarily cooling down is the benefits that you get by owning real estate. There's a lot of tax benefits, tax write-offs when you own real estate, and that's why a lot of wealthy individuals actually do it. The other part is that if you have income producing real estate, now you're actually collecting money from the rents, hopefully more than what it actually costs you to carry on that property, and you're able to not just keep up but benefit from it. This is considered passive income, and it's taxed at a very different rate, much lower than the ordinary income, which is the income that we go and trade our time for some sort of money. That's another reason why so many wealthy individuals enjoy investing in real estate and income producing real estate. So you have an asset that is steadily growing over time, appreciating over time, and hopefully keeping pace with inflation or beating it. Then you have the depreciation and tax deductions that you get. It's kind of like a phantom cash flow that you get. And then you have passive income that hopefully, if you do the math correctly, you get amount of money that comes in, you pay all of the expenses within the property and still have some extra money to go through. And that's sort of the basic formula of getting into the real estate and benefiting from it. Now, one of the interesting pieces that I think is happening and we're going to see happen is that we are seeing that the larger companies and larger investment firms are starting to invest in real estate now. They are buying quite a bit of cash producing properties, income producing properties, and they're turning it onto the market. They're sometimes even buying multiple properties on the block so that they can go in, fix up all of those properties, raise the value, raise the rental price, and then, of course, rent it out to folks. That is an interesting strategy that exists, and we've seen large and small investors do that. And of course, their goal is, again, to get as many properties as possible to get this passive income, because as inflation goes up, the debt, if you get it at a fixed rate, stays pretty much steady. Of course, the taxes and some of the other expenses that you have with the property might shift. However, the overall base of borrowing of the money stays pretty much flat unless you refinance, and hopefully the income goes up. So you'll have something that is very flat, meaning the expense and income going up. And that is a beautiful part of the math to get into if you ever can, which is why we're seeing some of these investors going out there and purchasing as many of these properties as they possibly can. Of course, with prices going up, now you have the mortgage rates going up. Individuals who are trying to get into it are a bit more challenged these days. It's making it much harder to actually get into the property. Now, we might see some programs coming in, and one of the interesting pieces that many folks are talking about is Fed going to actually crash the economy, and they just might. Of course, we've been seeing very volatile stock market, which is what I've been expecting. So volatility has gone up. We've seen some of the stocks actually go down 26-30% in one day. Hello, Meta, or Facebook, should I say. I don't know. Call it whatever you want. It's the same thing to me. We're seeing those prices go down, we're seeing volatility go up, and it's been a very interesting thing for those who are trading and good at it. For the long-term buy and hold, we've been starting to get into bearish territory. We've seen it with crypto, we've seen it with the stonks, and of course the bonds are actually starting to go up. So an interesting piece is happening for sure. And for me personally, while I enjoy all of those things and I think that they're kind of fun, for investing purposes, I like something boring, steady, that is producing income if I ever can. So I appreciate you watching. And if you're interested in learning more about why investing in something boring might be actually good for your emotional state as well as your wallet potentially, please join me on this channel. Make sure you subscribe, like, comment, put in questions, put in your thoughts and opinions. I do listen and I do pay attention to those. And one of the pieces that is coming in the few short days is the Real Estate on the Cheap mini course. In this particular course, I will take you through how you can go into real estate investing, how you can get a property for pennies on the dollar. It's very simple, it's very easy, and I think it's very fun and a great way to get into real estate if that's something you want to do. Now, it's not for everybody, and it's not as liquid. One of the things to understand about real estate is that it's not as liquid as the stocks or the crypto, where you buy now and 5 minutes later you sell, unless you're on Robinhood and they hide your sell button. Or Coinbase, and it doesn't work. But nonetheless, it doesn't work exactly that way. With real estate, yes, you can flip properties, but instead of minutes or hours that it might take, or days, it might take weeks or months, sometimes even years. Now, there are some of the solutions that we're going to be implementing within the Real Estate on the Cheap challenge to help you out. And yes, crypto comes to the rescue. So if all of that is of interest to you, make sure you subscribe, make sure you hit some sort of notification button, make sure you like the video so we can help out more people and invite bigger crowds. And I look forward to seeing you in the next episode.